It's now time to bring you a first feature on the show today. After Nigeria's economy slipped to its worst recession in more than 4 decades, the country recorded a rebound in the last quarter of the year 2020 with just about 0.11% growth rate, one which is considered quite weak based on the fragility of the growth rate. But there seems to be a silver lining in the dark cloud with the recent projection of the International Monetary Fund. In its World Economic Outlook, the IMF revised upward its growth forecast for the Nigerian economy this year to 2.5% from its earlier projection of 1.5% thereabout, earlier announced in the month of January this year. The January forecast was a downward review from the forecast it had earlier shared in October 2020. Now, the global body also projected that in sub-Saharan Africa, growth will strengthen to at most at about 3.4% this year, which is 0.2 percentage point higher than the previous forecast. The IMF also projects that the world economy is set to grow by at least 6% this year, up from its 5.5% forecast in January, a stronger economic recovery in 2021 as COVID-19 vaccine rollouts get underway, while some sectors of the economy may be experiencing a rebound. And that's what we're also going to be looking at the possibilities of this projection and turning it into reality. I have joining me now live via Skype to discuss all of this and much more, Africa Tax Leader with PwC PricewaterhouseCoopers, Mr. Taiwo Oyedele. Good to have you on the show this afternoon. It's quite a U-turn in terms of the prediction we are seeing from the International Monetary Fund. First, it was a conservative approach, saying 1% growth forecast, and then now we are seeing 2.5%. Are we still within the territory of cautious optimism, or this is really an optimistic twist to the narrative that we're expecting for this year?
I would say it's still cautious optimism because really the only difference majorly that I see between the previous forecast by the IMF and the current forecast is they've just revised all the forecasts upwards, expecting that growth will be higher, which is why Africa's growth is now being projected to be 3.4%.
Hello, Mr. Taiwo. Okay, we are having a little bit of a hitch in communication there, but we are discussing the IMF projections so far that we expect, looking at a 2.5% growth rate for this year. Mr. Taiwo Oyedele, can you hear me now?
Yes, I can hear you.
Now, please continue with your thought on whether or not this is a conservative approach in terms of the forecast we're seeing 2.5% from the IMF.
Yeah, I would say it's realistic. I wouldn't say it's conservative because it's higher than the previous forecast by the IMF. And this is essentially because maybe the worst of COVID-19 is considered to be behind us. And if you consider other factors like the price of crude oil, it's now at about $60 per barrel, which is much higher than what we have in the budget. I think those are pointing towards the fact that we should be expecting something around 2.5%. Even though I would also be big part that even at 2.5%, we're not doing well enough. That's still a growth rate that is below our population growth rate. Especially because data also is indicating that because of COVID lockdown and everything around restriction of movement, you're going to have more babies being produced, which means more people being born, higher growth rate. But if the GDP growth rate is less than that, it means that more people will get into poverty by the end of 2021.
Is it enough to peg our optimism, whether conservative or not, to the vaccine deployment and then the recovery we are seeing from that aspect? Because we still have to keep our fingers crossed in case of any other shocks that we're coming, because this is an external factor that we cannot necessarily control at this point in time. Looking at how the COVID-19 has also gone by, and then the fear of the mutating virus and whether or not the vaccines can really nip it in the bud.
Yes, that is true. I think nobody knows exactly how COVID-19 is going to play out with the mutation and the fact that even there's still concerns about the efficacy of the vaccines or whether they're entirely safe. But the reality is, I think the world now understands COVID-19 better than last year, which means we're learning to live alongside the virus. And what that means is, whatever it's going to be, we do not envisage that there will be any complete lockdown of economic activities. And to the extent that we can still carry on economic activities, particularly for the less vulnerable population, which are really the active population, I would say that those estimations and forecasts are realistic in my own view.
And then we're also looking at the fact that for the Nigerian economy as well, we are seeing quite a recovery in terms of oil prices. At a point in time, the peak of COVID-19, we didn't even have oil price at about $10 a barrel. Now it's about the $60, $62 threshold. And we're also optimistic by mid of the year, we should get back to pre-COVID-19 levels of about $70 a barrel. The picture is a little clearer now for our foreign reserves because the peg we had in our 2021 budget was slightly lower, about $40 thereabouts. So it means we have much more earnings at this point in time. But do we have cushions enough to take all of these to now focus in key sectors of the economy? Infrastructure deficit that we have at this point in time, dealing with inflationary pressures that are well beyond our level of control that we can deal with. The average Nigerian is paying much more for everything. So in layman's terms now, how does oil recovery, the price we're seeing here and the forecast on paper translate to any sort of economic sense?
Yeah, I think, for Nigeria, we always have to put it within the context of the fact that we have internal factors and we also have the external factors that will influence how well our economy is able to recover. So something like the price of crude oil in the international market is driven largely by activities outside of Nigeria rather than within the country. If the price of crude oil is sustained at $60 to $70 per barrel, the immediate gain for our economy is that we have more foreign exchange, able to stabilize the naira-dollar exchange rate. And if that exchange rate is stabilized, you'll find that some of the reported inflation that we have been dealing with will be under control. So the biggest impact, apart from revenue for government to be able to fund infrastructure and recurrent expenditure and whatever it is the fact that we have more foreign exchange stabilized in naira. Beyond that, it's also the fact that if you think about it, the fact that the rest of the world is stabilizing, and one point that the IMF pointed out in their report is the fact that there has been intervention in terms of fiscal support of about $16 trillion across the world. So these interventions have helped in reducing the level of contraction we would have seen across the world. And Nigeria also has been commended for the type of interventions we've had. And to that extent, I'll say, even though the price of oil alone is not sufficient to give us the confidence we want, but it will make a big impact. And I think we have to then focus on the other sectors of the economy. Of course, infrastructure is key, but also is human capital development, as well as focusing on sectors that are particularly labor intensive, so that even when we are growing, the economy, that growth is inclusive otherwise. Because the problem with the other sector is the growth there is usually not inclusive. And the more you leave people behind, particularly the younger people, the likelihood that the insecurity we have will continue.
Let's still deliberate on the current picture we have in terms of our macroeconomic stability level at this point in time. The Central Bank of Nigeria is trying on its own bit to ensure that we have some level of liquidity injection consistently. We are trying to see rates also stabilize, lending to the real sector of the economy also improve. But do you think the Central Bank, through the Monetary Policy Committee, is doing enough to stir the tide of the recessionary pressures we are dealing with at this point in time? And then now translate the potential of the growth into reality, and then the part for the fiscal authorities as well too. We're not seeing so much of an aggressive push in terms of our holistic approach to getting out of the recession, not just technically but in real terms.
Yeah, I think the monetary authorities have been, in my view, they have been working very hard.
Extremely.
We cannot blame them for not doing enough. We may have differences and different opinions about whether those policy measures were the appropriate ones, whether some of them were too late, whether they were too little, or whether they would have been done differently. But overall, I would say that the monetary authorities, again, they have been very, very active and they've been very responsive. It's not an easy situation to deal with, and we have to really point that out. Some of the areas where some of us are still looking forward to government to do something is trying to unify the exchange rate, but that also comes with a lot of downside. I'll say overall, the monetary authorities have done well. For the fiscal authorities, also there have been some positive moves, particularly in the Finance Act of 2020. So there were various interventions like exempting, minimum wage earners from paying taxes, small companies from paying education taxes. These are really moves to stimulate the economy. Unfortunately, fiscal matters, you don't see the results immediately. It takes time. Monetary is more immediate and more short-term. But overall, combining the interventions from the monetary side and the fiscal side, I think that we have done well. Of course, and do better. We also need to sustain the gains we have made while we're trying to address the areas of challenges and shortcomings.
Now, Mr. Oyedele, let's talk about stimulants. You just made mention of that, stimulating the Nigerian economy. One of the biggest stimulants we would have expected for our biggest revenue earner in terms of foreign exchange is oil, and we're still seeing a late passage or some delay in the PIB. Now, on the other side, where we're looking at the bigger picture of the economic stance that we have going on, we have the Finance Act and also the stimulus within that regard as well now. But looking at growth patterns now at subnational level, state by state, we cannot quantify the growth recovery process as equal if we want to paint things clearly. So now at state levels, what sort of conversations do you expect governments to also start having as individual units and then working as regions, not necessarily as silos, so that we can then achieve this real impact of having about 2%, 2.5%, or even optimistic 3% growth in the entirety of the nation's GDP?
Yeah, I think the first thing is to acknowledge and recognize that 2.5% or even 3% is not good enough. We should not be growing at a rate that is lower than the African average or the global average. We need a lot more than that. And the subnational as well as the federal government at the center need to realize that this is a national problem we are dealing with. And therefore, they need to come together in trying to address those challenges. Some of the difficult decisions that we need to make as a country, I sometimes feel like we should drag on them, like the removal of subsidy on petroleum products, particularly petrol. We've seen all manner of reports and videos on social media showing that these products are being smuggled to neighboring countries and they are being sold by some criminals. And this is really costing the economy a lot of money that we cannot afford. These subsidies likely do not go to the poorest people. So the question would be, if you are saving whatever amount it is from first subsidy, how do you apply that to be able to stimulate the economy and support the most vulnerable population, household, and small business? Those conversations are not seen enough in those directions. But ultimately, we have to acknowledge that even without the pandemic, states will not grow at the same pace. Unemployment rate will be different, challenges, the states are just different as well. But have to also look inward. What is it that they can do for themselves rather than relying on sharing of funds coming likely from petroleum products and related income from the center. So if you start thinking about productivity, how can you get your people engaged to be productive? And when they're productive, they earn income and then they pay taxes. This is the only way that is sustainable. And COVID-19 has also presented an opportunity for fiscal authorities to collect data that they didn't have before, because almost everything people do today, they do online. That leaves a trail behind that cannot be erased. So getting data helps you to be able to tax the right people, not the vulnerable people, so that people pay according to their ability in line with the law.
You talk about data collection and how this also ties with tax collection measures and how to also increase the volume for revenue generation. But before we even delve deeper into that, now let's still see how feasible it is for Nigeria to grow when we are comparing the GDP growth rate or the expected figure for the year 2021. We look at our population rate, we look at our inflation rate, we look at unemployment rate. So it's quite difficult to see any real growth if we still have these other indices skyrocketing and the GDP growth rate is still moving at a tortoise level of, say, 2.5% when we have inflation and other figures in double digits, don't you think?
Mm-hmm. Yes. So the thing is, I think the Nigerian economy is at a very low point. It's almost, inconceivable to think that there will be further contraction, which is why even in 2020, the year of COVID, we ended up recovering from, at least technically, I would it like that. We recovered from a recession. And the decline contraction for the whole year was just about 1.9, which was much better than had been expected and for many other countries within Africa and the rest of the world. But the thing is, as much as we expect that we can grow in 2021, and that is considered to be realistic, we have to be thinking about how do you get about 7 to 8% growth rate. That's when people begin to feel the impact, and that growth has to be inclusive. And the way to do that, in my view, is to focus on the sectors that are inclusive and labor intensive. Agriculture, for example, services, trade, industries. And what you really need to do as a first step is remove impediments. So we have impediments in almost anything you want to do, from having multiple regulators, multiple taxes, multiple agencies, to all manner of people, especially for the informal sector and the small businesses who are really the engine of growth. They have to go through a lot every single day. Trying to clear stuff from the port is a nightmare, and it's rocket science. Now, if we start addressing these pockets of impediments here and there, and of course insecurity, which I do not underestimate how difficult it can be, then it will be easy for us as a country to start looking at very decent growth rates in the region of 6, 7, or 8%, and not 2.5. Maybe that will not happen in 2021, but we can use 2021 as the baseline to set the foundation for a significant growth rate 2022.
Okay, now, Mr. Oyedele, as we are gradually wrapping up our conversation at this point in time now, some would say the state of your currency is the state of the nation. What do you make of the instance of, first and foremost, forex scarcity that we have going on for key sectors of the economy that still need this exchange to either import or also fuel their operational cost? We have that there. And then we also have the fact that the Naira is not necessarily trading in its best outlook so far. It's quite a difficult situation, to put things mildly, as to even pegging it to the dollar or to the euro or to the pound sterling. So even if we have any sort of growth, the Naira in hand does not make any sense because it's quite little compared to other global currencies that we're seeing in the market.
Yes, that is true. I think the reality is, first and foremost, our balance of payment is negative. So we just don't earn enough for it to be able to meet the demand for foreign exchange. And what that means is it puts pressure on our foreign reserve. So therefore, you have to do something as the authority. Many analysts may not agree with what the CBN has been doing, including myself in some respects. But the reality is that we do not have enough effect. I do think that part of the reason why we struggle a lot is because we do not have investors' confidence. So you have a crisis, and then you take some steps that further confirm the fact that everybody should be worried. And then people just hold on to their monies anywhere they are around the world. For you to have development and stabilize the exchange rate, you need investment, and particularly foreign direct investment. Some reports have it that we have nearly $19 trillion around the world, either attracting 0% returns or negative returns. Those are monies that should be coming in our direction. But if they don't see the confidence from the economic side, from the political financial side, from security side, safety of life, property, those monies will not come in our direction. So which means our last hope is just to expect that the price, and hope actually, that the price of crude oil will be high enough to generate enough forex for us to meet our own demand. The likes of Dangote refinery to come on stream quickly so we can stop spending the little we have importing refined products. In the meantime, there's no silver bullet. We have to just deal with the situation we have. At best, maybe the authorities will try and
Exactly.
give some level of confidence back to the investing community.
Thank you very much for your time on the Business Nigeria show today, Mr. Taiwo Oyedele. It's been a pleasure speaking with you, and we can only hope that we have a holistic process to ensure that we have the Nigerian economy stable. We have to look at issues around insecurity, look at the bigger economic indices that we have on ground as well, and all of the stifling challenges that continue to mitigate any sort of progress that we make. We cannot take one step forward and have to take 5 steps back. That does not make any sense at all. Thank you very much for your time on the show today.